Hi, this is Dustin with Dustin's Dollars, and today I'm going to talk about a high risk, high potential reward stock named Tellurian. Before I get in, real quick, let me remind you I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I have a long position in Tellurian, so take that for what it's worth. And so basically, this video should be for your entertainment only because I could be wrong about everything that I say in this video. You need to do your own research before making any investment decisions. So, that being said, let's get into it. Again, I'm talking about Tellurian today, ticker TELL, and this is their 1 year chart. I had it up. They are currently a 1.75 billion market cap company. I am not going to be opening up any filings today. This is going to be just sort of an introduction to the company, and I'm going to be showing some select slides, couple links from the web, and then a couple slides from their corporate presentation, their investor presentation, to give you a sense of the company. I'll probably have more videos in the future going into more details and giving a little more commentary, diving deeper. But today, that this is going to be mostly an introduction just to a stock that I like, that I have a long position in. I've been interested in for quite a while. And so what is Tellurian? They're based in Houston, Texas, although they are looking, most of their operations I think are going to be in Louisiana. And they're in the natural gas business, but specifically they are wanting to build a liquefied natural gas business, a liquefied natural gas export facility, I believe is the right term. And before I go into Tellurian too much, I'm going to give just a quick overview of my understanding of liquefied natural gas, because you may not be familiar with that. I sure wasn't before I started looking into the company, looking into the industry. And so this is from the EIA, the US Energy Information Administration, the actual government website. Let me make this a little bit bigger so maybe you can read it. Liquefied natural gas is natural gas, right? The same natural gas that many folks in the US have in their homes to heat their homes. And this is natural gas that has been cooled down, and they say to about negative 260 degrees Fahrenheit. And when they do that, it gets way smaller. And that lets them actually ship it. And that's sort of the whole point of liquefied natural gas, is to be able to take the natural gas wherever, we can get it out of the ground, wherever somebody can get it out of the ground, and be able to, have it readily available, and then liquefy it so that it is now significantly denser, so it takes up a lot less space, meaning that they can now transport it economically, right? Because now that I think liquefied natural gas is usually transported on tankers on ships, and so whatever the capacity of that ship is, they can store 600 times the volume that you would get if it was just the natural gas part. And so that's the point of liquefied natural gas. That's why it is valuable, right? Because not all the countries that need gas have gas, and that's really the big idea behind liquefied natural gas. And there are already multiple LNG export facilities in the United States, and there are already countries. Japan is a big one. China has some. India. Over in Europe, there are more. I don't know the full range. You can look it up. It's a maturing industry, I would say. And all of those countries have import terminals, right? They are net importers of natural gas by getting liquefied natural gas, and that is what Tellurian wants to build. Is they want to build a facility in the United States where we have, at least at present, plenty of excess natural gas, such that we can actually liquefy it through one of these liquefaction, I think that's the word, facilities, and load it on a ship and then send it over to the countries that need it. And so I'm going to go through a couple of select slides in Tellurian's corporate presentation now, highlighting a couple of bits that sort of help introduce you to the company, and where they're at right now. So this is sort of an artist's rendering of the facility that they have named Driftwood. Driftwood LNG is the name of the facility they want to build, and the facility does not exist, and they currently do not have all the pieces in place to be able to build it. Most notably, they do not have the money. They do not have all the money that it takes to build it. But the way that this is kind of structured, Tellurian is not even the company that's going to build it. They have selected the site, they own the land, they are going to own the facility once it has been built, but they actually contract out to a different company. They have a contract already put in place with Bechtel, which is a pretty good contractor. I think there's a slide on here talking about, it's a leading LNG contractor, and so they have this contract already set up, already ready for them if they once they have the money to sign a line, and Bechtel is ready to start building, and that's where they're at right now. And they have I'll talk just a minute about the progress, but this shows you that like the state of the company. They don't have the facility yet. They are trying to get all the pieces in place to be able to start building it. Once they start it will take a couple of years, I think on the order of 3 years or so. And I don't have the data right off the top of my head right now, because the timelines have shifted over time since I've started following the company. But it will take a couple of years. So I think if they started building now, the first gas might be able to be exported maybe by the end of 2024, something like that, or maybe beginning of 2025. I think we're sort of waiting on an updated timeline from the company in terms of what they exactly expect here. But that's the state of things right now. And so this is actually Driftwood is I should say a 27-ish million MTPA, that's a million tons per annum per year facility, and they are actually going to build this in stages. And right now they are targeting stage 1, which is plants 1 and 2, and that's an 11 million tons per year capacity of liquefaction, right? That's what the facility they build is able to liquefy the natural gas that comes to them, and then and be able to load it onto the ships, right? And that's what you see in this picture. I wonder if I can zoom in a little bit here so you can see that. That's not great. There we go. Yeah, so this would be their facility, right? And they'd have a pipeline presumably somewhere that's getting the gas to them so that they can then liquefy it, and that gets loaded onto these tankers, the liquefied natural gas shipping tankers, that then go out and deliver it to the company, to the countries that need it. And they don't own these tankers, they own the facility, right? They also may or may not own the upstream gas, and that's actually an interesting thing about Tellurian, is that they do own acreage that produces gas. So they are not strictly tied to just purchasing gas from another company. They actually have some producing wells, I guess you would call it. Sorry, I don't even know what the right terminology is. I've looked into this enough to understand what they're doing, but I don't know the full industry there. And they do produce some gas, and I think there's a slide maybe somewhere that talks about this, but they did talk about it in the most recent report, that they are building up those. They're producing more, right? And they actually use this. They talk about it as being a physical hedge. I'll find it. Maybe I won't. But the point is, they are actually producing. There we go. I found it. Their production that they actually have, right? They're building it up, right? So by the end of 2022, they expect to have, what's this, 129 million cubic feet per day, I think. Or here you go, 2022. This is how much they expect to add. And so I think by the end of 2022, they expect to have 220 million cubic feet per day of actual natural gas that they can get out of the ground. And so they are building this up over time. And what this actually gives them is, like I said, it lets them actually source some of the gas themselves. So they are not tied to market rates necessarily. This gives them they like to call it a physical hedge, right? In terms of what their upstream costs are going to be for natural gas that they would then take in to liquefy. They have to get that gas from somewhere. And this lets them actually say at least some of the gas, and who knows how much they'll be able to produce in the future, right, by the time they actually need to start exporting at the end of 2024 or 2025, whatever those timelines are, that they can actually get some of that gas through their own operations, so they can control all of those costs. I think some of how they're going to source their upstream gas is a question mark, and that's one of the reasons why the company is a high risk company. I'll call that out right now. They don't have all of the natural gas reserves that they own that they can actually produce to fulfill what they intend to export for the Driftwood facility. So I did mention this is a phased contract, and they are currently looking to currently focused on stage one, as you know you would before you do the further stages. But the real nice thing about this is that they have already sold the liquefied natural gas. As I said, phase one is 11 million tons per year, and this sort of shows you what they have already sold. They've already sold 9 of those 11, which is what they intended to sell. So it is already contracted that once they start producing those 11 million tons per year, 9 of those 11 are already going to go to these companies, right? Each of these 3 companies signed a contract to purchase 3 million tons per year, and then the remaining 2 out of that 11 go to Tellurian, and they are able to then sell that, and that's how they actually get something out of this instead of that's how they actually then make a profit, right? Is they're, or hopefully make a profit. They're able to sell those 2 million tons per year themselves, and they use these others as collateral to get the money to build the facility. And they have these contracts, and we don't know the exact numbers on them because they're proprietary, but these contracts are indexed to some of the liquefied natural gas indexes, the JKM, the TTF, that I could probably will have to wait until later video to really talk about those contracts. But that gets me into the actual, let me find it, slide 12, the actual sort of potential cash flows that they have, right? And this is super, super high level. There's a lot more details to go into, but today, like I said, is just an introduction. The phase one development cost for the terminal, for the whole facility, is about $12 billion. And so of that $12 billion, they're looking out of that what their cash flows could potentially be, or what the cash flows will be for the actual terminal itself. And so they've done the math here with, if the JKM, which is one of those, it's a liquefied natural gas index, I guess you would call it, right? It's in Japan Korea marker, I think is what it stands for, and it's like over in Japan, roughly what are the prices that things are trading at for liquefied natural gas per million British thermal units. And so if that was at 14, they are basically saying that they'd get $12 because it costs $2 per MMBTU to transport it. And if it costs them $4 to purchase the gas at the open market, per the, I think the index there to watch would be like Henry Hub, and then it costs them $1 to liquefy it. That gives them a $7 per MMBTU margin, which multiplied by their 500 billion cubic feet of capacity per year, that gets them, per these rough calculations, $4 billion in annual cash flow. And so, they're using this math to sort of say, hey, if we actually just had the $12 billion, we'd be making back, 33% per year, right? That would be your return on investment right off the bat, right? And they don't, that therein lies the problem, is that they don't actually have the money for this, right? They don't have $12 billion laying around. They're currently trying to seek financing from banks in order to be able to do that. And that gets me into one more thing I want to touch on before I do go into the current progress, and that is one of the other bits that you really need to understand about a project or a company like this, pursuing a project like this, is, who's doing it, right? What is the management team? Can they actually get this done? And Tellurian has excellent management, right? The absolute, you can look at all these folks here. They've done great things. The number one is Sharif Suki, the executive chairman of the board, co-founder of the company. He was the prior CEO of Cheniere. He founded Cheniere, and Cheniere is the, I believe, the company in America that did LNG exports, right? So he actually was the CEO at the time that they built that, and it's a crazy story. They, I think, were actually building an LNG import terminal, and then because of shifts in the market and shifts in I think American gas production, we went from an importer to a potential exporter, and he led that turnaround in the company and successfully built Cheniere into what it is today, very, very much, right? I think a lot of people credit him for that, because he was the CEO while they actually built the terminal. And you can look into the history of Cheniere, and maybe I will in a future video, but he's a rock star, basically, And overall, they added up here that these folks that they have in their executive team are responsible for, we're involved in about 18% of the LNG that is in production today, right? That's huge, right? That's I believe that's a global number, not a US, a global number. So the management team is there. They've done this before. They're top notch, and so that is actually a big part of my investment thesis. I think many other folks, and is why they actually have a, what did I say, $1.7 billion valuation right now, despite not really having, being years away from even potentially having terminal built, and it's not even a sure thing that they're even going to be able to do it. But people put a lot of faith into these guys. So that does get me, I think, through most of the introductory points that I want to touch on. One other thing that I would mention, like I said, is that they do have sales purchase agreements for 9 million tons per year of that 11 million tons per year that phase one intends to cover to produce. And another one I should mention, probably should have said this already, is that they are fully permitted, right? They already have approval from all the governments that they need from FERC is the main one, Federal Energy Regulatory Commission, I think, and all the local governments, state governments, whatever. They have all of that already all the permits. They already have them, and they already have the site. They have the full plan, and so right now they have two big things that they need to get. Number one is they need to actually make sure that they have the raw gas that they need in order to be able to liquefy all of what they intend to produce, and to be able to export. And this is the big one, the really big one, is they are talking with banks in order to actually get the money that they need to build the terminal. They need that $12 billion. And then once that happens, they will make their quote unquote final investment decision. That's the FID here. That's what they call it in the industry. And that's when they basically make their decision, say, yep, we're going ahead with the project. We've got everything in place. And that's when they start everything for real. And as basically that's when they say it's happening, and the whole project is going forward, and it's a lot. And at that point, a lot of these risks are gone, and it's more just execution risk. So that is roughly the state of the company. They did recently report earnings, and they've actually they said this a bit before that, but they put it in writing here that they do intend to actually start the construction of the terminal this April, right? That is 2 months from now, and because it's still the end of February here, and they're doing that before they even have the financing completely figured out. And they said this is his quote from the CEO: "We will seek to conclude the financing process shortly thereafter." On a roughly weekly basis, the executive chairman, Sharif Suki, does do a quick video on YouTube. Sometimes it's just talking about the general market. Sometimes it talks about the company. Most of the time it's actually talking about the general market with with a comment or two about the company thrown in there. But one of the things that he had said there is that it could actually finish the financing. They could actually finish the financing before they start the construction, but it's sort of like they expect it to be somewhere around the same time. So at this point, they have actually said also that they are negotiating with about 50 different financial institutions. And I mean, that therein lies a big part of what is risky here is you have to go on faith that they are actually going to get the money they need to build the terminal. Because if they don't, they still produce gas. They still own, acreage there and own some gas reserves. So it's not like this company is like nothing and it's just a plan on paper. They do have something physical there, but I'm not sure that they're gonna be able to support anywhere close to a almost $2 billion valuation based off of that, right? That valuation is very much a discounted value of the future Driftwood terminal being built, in my opinion. And they've made this comment that they have signed 50 non-disclosure agreements with they've signed NDAs with 50 different banks, and they're negotiating with them. They're trying to get the best financing. And this is kind of where, if you are a skeptic and you're bearish on the company, that, you can make the argument to say, well, it sounds like they're just reaching out to everybody they can. They're desperate. They're bringing to so many people, and they still can't get anybody to fund them. the bullish side of that, the counter argument, or you would say, your counter speculation, really, you would say, is, they had so many people that were interested in working with them that they signed all those NDAs with 50 different banks, and now they have so much to sort through that they're trying to figure out what are going to be the exact best terms for them, and it's taking long to go through all the lawyers and get all the I's dotted and the T's crossed in order to get this put together, because this is $12 billion or what. Again, we don't actually know the financing structure because it's complicated, which I could go into that in a future video. It's not strictly just one big loan and they're done, because we're not sure on that. The other thing that we're really unsure of is we don't know exactly what the structure of this is going to be. We don't know what the rates are on the loans. We don't know how much ownership they might have, or how much ownership they might have to give away to somebody else as of the Driftwood project. And so there's all sorts of unknowns that will all come out, and we'll all know once they finally get this financed, if they do, and release the details. And so I think that's also why you see a lot of uncertainty and a lot of uncertainty discounting in the potential value here, because if they had this terminal up and they had this producing, I think that the stock would be at a much higher price and the company would much higher valuation, but that's being discounted because there's just so much uncertainty in what is that financing going to look like. I did want to bring back just a little bit to the actual fundamentals of liquefied natural gas, and you can see I showed you before they had that slide about this illustrative cash flows if JKM was at $14, and you look right now things are in a bit of a crunch, and JKM is actually, you can see here, hope maybe that might be too small, but you can see the futures for the upcoming months are 27, 29, 30, 31, right? And even for the winter of the November 2023, December 2023, January 2024, right? These are at $18 and $19. So these are all above. If you go all the way out to the futures in 2025 and 2026, they're in about the $11, $12 range. So those are lower, but we don't actually know what the prices are going to be by that time. If you look through Tellurian's corporate presentation themselves, and you can find third parties that are saying the same thing, they believe that there's an underinvestment in energy, and specifically in LNG, for companies like China and India and Europe, honestly, at this point, which I'll get to in just a second, where their need for LNG is going to go up. These prices are going to crunch because, if you actually look at the chart, for April 2022, back through the pandemic, and even through 2020 and most of 2021, even back in 2019 before the pandemic, the futures for April 22 here were at $7, and that actually trended down. If you even look at this has been Tellurian's been around for a while, but if you look at this chart that goes from May of 2019 all the way through to May of 2020, sure looked like LNG was getting cheaper and cheaper and cheaper, and even to here, it's still just broke even back at the back to $7 in April of 2021. And so when they're trying to project out cash flows at $14 of JKM, but actually JKM was at $7, it didn't look so good. However, Tellurian kept arguing, or Tellurian and some other folks who were analyzing the industry kept saying that, hey, there's going to be a crunch, right? Like there's actually not going to be enough energy to go around, and you actually see that now, where prices are way higher at this point. There's a spike, and this is tying it to current events with Ukraine and Russia. This is very, very recent, in the past week. Russia had built this pipeline, Nord Stream 2, or I'm not going to say Russia built it, but there was a pipeline, Nord Stream 2, that was going to take gas from Russia into Germany. This was going to supply a lot of gas to Europe, and this pipeline, I don't think, is going to ship any gas now, because of the sanctions. And there was even a statement from the US President Biden on Nord Stream 2. These are all they're imposing sanctions on this, and now, and this came out very, very recently, I think, is that's today. Germany is going to actually push ahead building 2 new LNG import terminals, right? So this is actually increasing demand, right? They previously were going to just get the natural gas through pipeline straight from Russia. Now they said nope, and they're actually going to import liquefied natural gas, and so this is again increasing demand for LNG. And I mean, in my opinion, this is going to just raise demand for LNG, which is going to raise the chances that Tellurian is going to get financing, and not even just get financing, but get good terms for them on the financing, because the fundamentals of LNG are, unfortunately, for the reason of the Ukraine Russia conflict, but it's a poor reason that you wish it wasn't happening, but this is actually going to be good for Tellurian probably. Yeah. So all right, hopefully that gives you an introduction to Tellurian. There's a lot to go through with this company. I'll have some future videos about it, as I do with all the stocks that I cover. But that's all I wanted to cover today, and I don't think I have anything in the chat. So thanks for watching.